Good evening, ladies and gentlemen. Today is March 31st, 2021. My name is Yuan, and this is this week's Market Wrap-Up. Joe Biden released $2.3 trillion infrastructure plan. The infrastructure plan U.S. President Joe Biden outlined on Wednesday includes $2.3 trillion investments over the next 8 years. Spending ranged from American household pipelines to fixing over 10,000 bridges as planned. In the meantime, the corporate tax hikes on the way, while fundings for the infrastructure projects would come from a hike on corporate taxes that would aim to raise the necessary pile of money over 15 years and then reduce the deficit going forward. In doing so, Biden would undo the action by Trump and congressional Republicans that set the corporate tax rate at 21% in 2017. Biden's proposal would lift the rate to 28%. 91 Fortune 500 companies, including Amazon, pay not a single solitary penny in income taxes, Biden said. Hedge fund Archegos Capital caused big panic on Wall Street. Banks are facing billions of dollars in losses after a little-known U.S. investment firm Archegos Capital Management defaulted last week on merchant costs due to heavy leverage and risk exposure on certain stocks, forcing a brutal near US $30 billion stock fire sale in one day. Nomura and Credit Suisse warned profits would take a hit after Archegos missing margin payments. This is the second time this year that extreme leverage under the use of derivatives tumbled the global equity market, with the first time be the Melvin Capital nearly collapsed after its massive bet against GameStop. The implosion of the hedge fund brings back the bad memories on Wall Street. However, the chief market strategist at National Security Corporation, Art Hogan, said, I don't think this is the tip of the iceberg. Finance departments see issues with Facebook's digital currency. Internal finance department documents show officials have deep concerns about the effect of Facebook's planned digital currency on Canada's financial stability. Facebook's stablecoin has gone through changes during its 2 years of development, which officials writing the briefing note believed had started to address, but not fully ease government concerns. Among the concerns were money laundering and terrorist financing, sound governance, stability of the reserve, and monetary policy transmissions for reserve currencies. Reads the briefing note to then Finance Minister Bill. Now let's see what happened with the market today. The North American market saw upward movement this week. The market slowly adjusting between the tumbles the hedge fund cost and the President Biden's infrastructure plan. The Nasdaq and the SP 500 indexes all seeing upward trends around 2%, while TSX is up around 0.1%. The European market gradually seeking opening while disregarded the financial regulators' warning on risk of market corrections and declines asset quality. The FTSE is up 0.01%, the CAC 40 and DAX are up around 2%. Moving on to Asian market, which are seeing different levels of recovery from the American new regulatory rules and the massive stock sell-off caused by the Archegos Capital. The ASX is up around 0.72% and Hang Seng is down around 0.4%. Nikkei is up around 3%. The Canadian currency is significantly weaker this week compared to other currencies, and the oil price seemed to adjust down for 4% after the Suez Canal back to order this week, while the gold is facing pressure and experiencing around 1.5% of price drop this week. And copper, the base metal, is down around 3.5%. Thank you for listening to this week's market wrap up. If you are interested for volunteering opportunity as the next news broadcaster, please contact the bridge. And the next event coming up is in the bridge, breaking into Bay Street, joining the bridge and investment society for an evening of networking, skill building, and fun where our audience will learn what it takes to break into Bay Street. Please follow the bridge social media page for more information to sign up for the event. And thank you. Have a good day.